now joining us on the studios is the Honorable Minister of Finance, Hajia Zainab Ahmed. Honorable Minister, pleasure to have you with us. Good morning, Nigeria.
Thank you very much for having me. Good morning.
Okay, yes, indeed, you're welcome. Honorable Minister, let's begin this way. Many experts described the economic climate of Nigeria between 2017 and 2018 as bumpy, considering the fact that the nation battled recession within this period. So before we begin to make projections into 2019, let's go a little bit back to 2018. So how did we fare economically in 2018?
Well, thank you very much. You recall that the economy slipped into recession in 2016 and came out of recession in 2017. And since then, the economy has been steadily on the path of growth. We closed the third quarter of 2018 with a reasonably good GDP growth, and we are estimating that by the end of the year, the results that we'll have will be a GDP growth of about 2.1%. So our projection for 2018 is 3.1%. But apart from the GDP growth, we have seen the significant improvement in inflation. Inflation coming down from 18.3% in January 2017 down to about 18.2% in November 2018. That also is an indication that things are steadily stabilizing. The foreign exchange regime also has seen some significant stability. There was a time that Naira to the dollar was about 500, but it has since stabilized to an average of 360, and this has been consistent for 20 months now. Our trade balance also has moved from a negative balance to a positive balance. Our foreign exchange reserves has steadily increased, and by the end of 2017, we were still within the region of $42 billion in foreign reserves. That is high enough to fund exports for an average of a minimum of 6 months, and by every standard, that is a comfortable margin. The economic recovery and growth plan had planned. Our target was first of all to pull the recession the country out of recession very, very quickly. Because if we didn't do that, the risk is we will have gone into a depression, and that is not something we want to contemplate in a country with the size of economy as that of Nigeria. And because revenues have been underperforming due to, one, the crash in the oil prices, which didn't affect just Nigeria alone, and also the generally poor physical position of the country, we decided consciously to spend to reflate the economy. Because revenues were short, the design was to borrow to reflate the economy. But to make sure that when we borrow, that we were spending on critical sectors of the economy, specifically the infrastructure sectors that have the potential to quickly trigger growth. And that is what we did. So we ended up borrowing in 2016, 2017. The design of the ERGP, if you look at it, is that the borrowing will begin to decline by the 2019 budget. And if you look at the budget, it has started to dip. And that was the trajectory that we had planned. So in 2019, we expect that we are going to have enhanced revenue growth. We expect that we are still going to borrow, but at a level that is less than the last 3 years. We expect that we will continue to aggressively roll out infrastructure, completing projects that have been started, concentrating on key priority projects that act as a trigger to enable improvement in the business environment. We also expect to continue to vigorously invest in the welfare of our people, improving the spending on health, on education, but also on the social investments, because we need to address the unemployment numbers that we have right now. We want to ensure that small, medium enterprises are given all the support that they require, including financial support, because that is supposed to be the largest employer of labor, not government. Thankfully, we've seen even the services sector turn around now. If you look at the breakdown of the GDP growth, even the services sector is now on a positive growth, and that is where the largest growth is expected eventually.
Well, thank you for your opening shot. I just wanted to ask you, for 2018, there were some buzz phrases that we heard, in the course of the year. You could say these buzzes were from naysayers. There was a claim that Nigeria had become the poverty capital of the world, on the one hand, and there were also on salutary figures with regard to unemployment coming from the National Bureau of Statistics. So how do you explain those figures against the background of what you have said with regard to what the government had tried to do from, say, 2015, 2016, and getting out of recession and then seeking to put the economy back on the path of growth?
So the initial concentration was to pull the economy out of recession. But even as we're doing that, we still were planning the social investment program, which kicked off in October 2016. And today, let me say this is about 2 years and 3 months. The Nigeria Social Investment Program is the fastest growing social investment program in the world today. We have beneficiaries that are up to about 13.5 million people just within 2 years and 3 months. And everything that needs to be done and put in place has been done. So now we have a situation where before we were chasing states, because we have to do this with the states. Now states are actually queuing, waiting for us to include them in the homegrown school feeding program, to include them in the various programs that have been. And we have now a huge demand for the Empower program, with graduates waiting on the queue for another batch to be employed. So it means in 2019 we can ramp up that program, double the numbers that we have in terms of the school feeding. The president has directed that the Empower program also is moved to 1 million from 500. The market money and the trader money programs have the potential to also more than double in terms of numbers, because we have found a way to quickly provide small loans to people by sending monies to them over the phone as a loan, and also being able to recover the monies using using their phone. In the past, we started by going through a facility kind of a bridge facility process handled by BOA. That took a lot of time. We found that after 2 years we had done just about 350 when our target was 1.6. So when we started the trader money, we saw we now have a very quick way to be able to deploy these loans. So these loans are not given by cash. They're given as loans over the phone to people, and then the recovery is also over the phone. And the infrastructure projects that have major ones that have all started, all we have to do is just keep providing funding for the works to continue.
All right, thank you indeed. Let me take you back to the Economic Recovery Growth Plan, which of course focuses on 3 strategic objectives, namely restoring growth, investing in people, and of course building a competitive economy, with a roadmap covering 2017 to 2020, now projecting into 2019. How will government fare in the pursuit of this? What are the mechanisms to ensure that this is achieved?
Well, what we are doing is consolidating the work that has been done over the last 3 years. Our concentration and focus is still on infrastructure, is still on improving the welfare of the people, and also is still on enhancing the security of lives and property. So the same processes that have started are being continued and being fast-tracked because all the building blocks have been put in place, so it's easier to go on. In the area of human capacity development, the health sector, for example, and the education sector have consistently had their funding increased year on year. The health sector in 2018 had this basic healthcare provision fund that has been earmarked as 1% of the consolidated revenue, and that funding has been launched, and there is a process that has been put in place, a mechanism to make sure that these funds are used by primary healthcare centers across the country to provide healthcare closer to the people. There's also the education sector, whose concentration is, in addition to reviving and improving the infrastructure, is also reviewing and providing additional training to teachers, because that is the basis of the education of the country. So teacher education is going to get special focus in 2019, so that we have better teachers to produce better students from our children.
Well, away from the public sector finance appreciation, let's take you back again to performance in 2018. You were talking about the numbers up to the end of the third quarter of 2018. Which were the others? Which were the sectors of growth? You mentioned the service sector. Which were the other sectors of growth and promise for 2018? And in particular, what happened to agriculture and solid minerals, which had been on the upward swing even during the course of recession?
So there's a good story around agriculture, and the fact is that agriculture has seen exponential growth to the extent that we can say we now have attained self-sufficiency in the production of rice. I remember in the ERGP our target was to achieve self-sufficiency in rice and in wheat by 2019, and in maize also by maize in 2019 and wheat by 2020. We're well on course to do that. Rice production, we can say, has improved so much that we don't have to import rice. So that rice comes into this country is coming in illegally through smuggling. Not only are we producing now, but we also are processing the rice locally. So end to end, it's local production, and also supported by the fact that we used to import fertilizer. Now we don't have to import fertilizer. We have blending plants that have been moribund, that have been turned around and producing at 100% capacity, providing all of the fertilizer that we need in the country. That has meant that there are lower cost of inputs for the farmers, making farming very attractive, and more people are going to farm. The mining sector also is a good story. We have seen, and let me now use numbers. In 2015, the mining sector contributed 500 million to the Federation account. By 2018, that had gone up to 3.5 billion. So it's not a large number, but it's the growth that we have seen. And also the President has approved the setting up of a special fund that is tied to a dedicated gold scheme, because we have pockets of gold in this country that have been exploited, but the exploitation is not on record. So there's going to be a special project which we call the gold scheme. Now that the approval has been given, we are going to fund that scheme. It means that we will set up buying centers close to the mining centers, and there will be a formal process that will buy this gold from the miners at rates at very handsome rates, not the kind of rates that foreigners that come into our country go and just extort and put this gold in their pockets and go out. Those gold will now be aggregated and will now be able to send them for refining. So our aspiration is we get to a point when Nigeria's foreign reserves will also be in gold beyond just being in US dollars. So it's a process that has started, and it will continue to grow. The agricultural sector, despite the improvements, saw some decline in 2018, and we have attributed the decline largely to the floods that have happened, that has really wiped out a lot of acreages of farmed lands, and also the insecurity that arose from the farmers-herders conflict. Thankfully, that has abated, so we are expecting that agriculture will rebound back and do much better in 2019.
All right, Honorable Minister, thank you very much. We have two other guests who are joining us for this conversation. Of course, they will still retain the Honorable Minister of Finance. They are two familiar guests with us on the program. Niyi Akunsiji is an investment and financial analyst. He joins us in the studios right here. Niyi, pleasure to have you with us on Good Morning Nigeria again.
Thanks so much. Good morning.
Also here, Professor Uche Waleke is a professor of capital markets and head of Department of Banking and Finance at Nasarawa State University in Kefi. Professor Waleke, pleasure to have you again on Good Morning Nigeria.
Happy New Year, my pleasure.
All right,
gentlemen, you're welcome. Now, before we actually go to them, I'd like the Honorable Minister to take just one last question for now, because the previous economic policies in this country, perhaps before the advent of this administration, you know, were ill prepared for eventual collapse of crude oil, either in the prices or, of course, in the quantity of production for a particular nation. Now, what is the plan? You know, because futuristically, it could happen again. And when it happened, between 2014 and 2015, the nation had it hard, you know, trying to readjust in terms of revenue generation and all of that. So does this, your projection into 2019, have provision for an eventual collapse of oil, which may happen?
You see, the country in 2018 and 2019 is better prepared to cope with any external shocks than we were in 2015, 2016, because now we have some fiscal buffers in place. We've also made some significant progress in terms of diversifying the economy away from revenues in oil and gas. We have saved not only the foreign exchange, not only the foreign reserves has grown up, but has risen, but also we have been saving through the National Sovereign Investment Authority. We have found ways and means to continue to build out infrastructure, not necessarily directly through the budget. So we have the Presidential Infrastructure Development Fund that the NSIA is driving, that has the capacity to attract investments, even from other investment authorities across the world and other investors. And that agency is now responsible for the build-out of the Lagos-Ibadan Expressway, the second Niger Bridge, and the Abuja-Kaduna-Kano route. We also have on the pipeline, just waiting for approvals, a new infrastructure tax credit scheme. This is a scheme that is designed to have a private business agree to build a road with their resources, and then they recover their resources from tax. From future tax. That means there is less burden on our budget, and then we gain the benefit of the efficiency of the private sector and also quick deployment of infrastructure. We also have inaugurated tax appeal tribunals across the country, several of them. This is about now 6 weeks or 8 weeks ago. There are very large sums. We have 18.05 billion US dollars that have been tied in appeal, 205 billion naira and 821 million euros that have been tied in appeals for years, not addressed. We have set up these tribunals. We are providing them all the support that is required so that there will be resolution. And at the end of it, we are confident that we are going to be able to gain, to recover back a lot of taxes from this agency. So we are better prepared in 2019 than we were in 2016.
All right, thank you very much, Hajia Zainab. Now let's bring in both Professor Uche Waleke and Niyi Akunsiji, whom I introduced a while ago. Professor Waleke, beginning with you, 2019 has been branded the year of great expectations for Nigeria. In about 5 weeks, we will begin our general elections, and a new minimum wage will most likely also come on stream. What's your outlook for 2019? But before then, what's your assessment of where we are coming from, 2018?
Okay, fine. Thank you very much. Let me start by saying that 2018, the economy had a mixed performance. In my view, on balance, there was an improvement. That's on balance. Beginning with the growth in real GDP, In 2017, you recall, the GDP grew by just 0.8%. And the latest figure we have is at the third quarter of 2018, is talking about 1.8% growth rate. And there is every hope that 2018 will finish up with at least a minimum of 1.9% GDP growth rate, which the IMF projected. So in terms of real GDP growth, yes, improvement over 2017. If you look at other indicators as well, yes, inflation is one of them. Inflation was 15.3% as at January 2018, but has come down to 11.28% as at November. Monetary policy, I would say, was also likely successful. In the sense that not only in being able to subdue inflation, the central bank was also able to, stabilize the exchange rate, and we saw a lot of convergence, across the various segments of the forex market. So, exchange rate was stable, inflation was down, and in terms of interventions too meant by the central bank, particularly the anchor borrowers program, we saw that feeding in positively in the agri sector. We also saw some little traction in the manufacturing sector and the agri sector. Agri sector grew by 1.9%, from 1.19% in Q2 of 2018 to 1.9% in Q3. Now, these are the positives, you could say. The red ink in 2018, happens to be clearly in the area of the unemployment figures, where we saw huge numbers of people, leaving the employment market. If you look at that report by the National Bureau of Statistics, yes, it wasn't as though jobs were not created, because according to that report, the number of those in full employment, those that have worked for at least 40 hours a week, moved from 51.1 million to 51.3. Okay, so jobs were created. But in terms of the number that entered the labor market, that's the labor force moved from 85 million to 90.5 million. So you have a situation where 5 million people are entering the market, and you're creating just 200,000, jobs, full-time jobs. That's on the one hand. On the other hand, of course, I can't finish the assessment without mentioning the performance of how the capital market fared, particularly the equities segment. We saw a decline in the stock market. Stock market lost about 18% in 2018. But again, I have to point this out. That was more, from factors that are not really tied to the fundamentals of the economy. The major reason why the stock market fell last year in 2018 was because of the monetary policy of the Federal Reserve in the United States, where interest rates, we know today, are rising and investors are exiting in search of higher yields. The second reason too happens to be the political risk. That made foreign investors in particular leave, and domestic investors, sit on the fence. We are also likely to see, much of this in 2019, but I don't see that exceeding the second quarter. To do a proper analysis of what is likely to happen in 2019, the outlook, we need to really disaggregate it. Yes, the first quarter is likely to be difficult, but I also believe that it is a case of the morning not showing the day. Difficult in the sense that the uncertainties will remain. In the U.S., yes, the Federal Reserve has signaled that the interest rate normalization, is going to slow down, meaning that we are likely to see these investors returning to the country, much later in the year. As long as the elections are free, fair, and credible. Okay, if they are free, fair, and credible, I see the political risk, being diffused, and I see investors returning. I see our stock market, once again rebounding. So for me, the outlook for 2019 on the average, will be a lot better than what we experienced in 2018.
Okay, so in 2018 it was a mixed bag, and in a nation's economy there's always uncertainty, even in developed nations, and that's what we're beginning to experience. At this point, let's go to Niyi Akinsuji. Now, let's get your expert assessment of the nation's economic performance in 2018, and using all the available indices, what are your projections into 2019?
Thank you. I think we've had so much of indices. I want to look at milestones, historical milestones that were achieved in 2018. one, the FIRS announced that it broke a new threshold in tax collection at stated at 5.3 trillion, and that's impressive. But what impressed me most was that about 54% of that collection came from non-oil sector. Now, what that tells you is that policies on diversifying the economy is working. Again, the customs also announced another threshold-breaking collection, of more than a trillion naira. And the CBN also announced that it had been able to now save about $630 million every month, from expenses, normal expenses on forex dissipation. So much that it was calculated that about $21 billion were saved over a period of 30 months. Now that also talks to a prudent management of the economy, and perhaps more than that, the impact of the 41 suspension, or rather not valid for forex policy on 41 items, and the purchasing managers index, the figures, for the first time in about 3 years that I've been following up on the figures, are very impressive. This, in 2018, as of December, it returned 60.2 points. That is, it was the normal aspirational level for the PMI is supposed to be 50% and above. And over the last 12 months, or rather between January and December, it was able to peak at 60.2. And that in December, out of the 5 subsectors, 4 performed beyond 50%. Now, that talks much on activities in the manufacturing and, of course, the service sector. So I think generally 2018 shows momentum. And to that extent, I want to be hopeful of what will happen in 2020. 2018 showed momentum. I want to see increased momentum, in 2019. Yes, we agree that revenue collection, were major challenges for that fiscal year. But I think going forward, from some of the policies I have seen, especially the budget's undercurrent, I am believing that things would be more stable. But again, we can also point out the recent announcement, by African Venture Capital, that Nigeria beat South Africa and Kenya, in new startup deals, from 34, a low 34 in 2017 to 136 in 2018. It shows that there is funding and financing for SMS, small medium enterprises. So going forward into 2019, I think momentum has been created. I want to see faster increased pace in economic activities, and I think it's from all the things that happened in 2018, 2019 should be achievable.
All right, Nayet, thank you very much. But just before we bring out other guests, you said something very interesting with regard to revenue collection for 2018, and thereby also relating the milestones achieved by both the customs and FIRS. FIRS posted numbers of about 5.3 trillion naira, and they are now projecting to 2019 for around 8 trillion. I'm wondering, well, this is not to be pessimistic, how realistic will this be? Because one of the mechanisms that was used in 2018 was VATES, that is the Voluntary Assets and Income Declaration Scheme. Now, if you had some useful numbers participating in VATES, of course, if they had declared their incomes and paid appropriate taxes for the period, then you are unlikely to get them into your tax net for 2019. Are the numbers not likely to be exaggerated if FIRS is looking at 8 trillion naira for 2019?
Well, I think what actually drove those figures were the intensification of digital technology in collection. My last reading of it was not up to 500 billion. And to that extent, it means it's not taking on a huge percentage of that total collection. But I think with with the digitization of the process and easing off, the collection procedures and protocol, more people were brought into the tax net, I think going forward, that is what we want to depend on. Ease of payments, I am very sure not many Nigerians are unwilling, to pay taxes, being the basis, of course, the fulcrum of income and revenue for government. So the 8 trillion is achievable. One, because we see increase in the pace of growth. A general increase in the pace of growth tells you that there will also be a general increase in the capacity to pay taxes, because it means manufacturing and other sectors are also doing well. So if we are able to do a 3.01, and I'm saying the worst case scenario, we do a 2.8 in 2019, it does mean that we would just a 0.5% increase in GDP always relates to a more than 30% increase in capacity to collect new taxes. So I am believing that when you cross-check or you cross-analyze your inflation rate, which is targeted at 9.98 for 2019, and growth at 3.01, and I'm saying the worst case scenario 2.9, and worst case scenario for inflation 10.1, this would still have impact on collections.
Okay. All right, Neil, thanks.
Okay. On the VADES program. The VADES program has closed, but the rigor that it brought still stays on. The total collections we have from at the time of closure was 92 billion in taxes, out of which 35 billion was collected in 2018. And the rest of the balance have been scheduled. You remember that the part of the commitment was to allow people to pay their taxes over a period of 3 years. But what it did to us was actually help to expand the tax base, and not just at the federal level, but also at the state level. So now we have data on those taxpayers, we have information of their assets, and we are now able to make sure that they collect their taxes. Apart from the VADES, the Federal Inland Revenue Services, maybe they have not advertised it enough, also have another scheme that is targeting high net worth individuals. So they have different ways and means to identify people who have a lot of assets, and then they compare what is on record as their assets with the taxes that they have paid. And they have been quietly doing this, recovering taxes from very high net worth individuals. But the real success behind the improvement of the tax collections is the automation of the tax collection processes, which he alluded to. But in addition to that, also the opening of tax offices nearer to the people. So there are tax office centers that are now across the country nearer people, and there's a lot of flexibility because you can file your tax online, from filing to your collecting your tax clearance certificate. All of that now can be done electronically. So there's improved efficiency in the FRS, improved efficiency in the customs. Customs has automated almost all of its processes. Even the auction process is now automated. So its improved efficiency doesn't go away when you do it in the first year. It stays on and is being consolidated.
One expert, did posit in one of our programs that Nigeria should be, if generating tax that should surpass what oil is giving the country, because some nations rely on tax for their existence. And thank you, madam. And let's return to Uche Owaleke, Professor Owaleke. Now, the delivery mechanism, will be a major determining factor in any successful implementation of an economic plan. Now, having done an overview of what happened in 2018, now projecting to 2019, the methodology, being adopted by the current administration, will it in any way, ensure positivity as we move into 2019?
Yes, you see, you can't talk about delivery mechanism without talking about the financing, the funding that supports it, which is why, some of us are worried, about the negative impact of budget delays. Okay, anytime you have a budget delay, it affects implementation. In 2018, we are just talking about a GDP growth rate of 1.8, 1.9%. That could have been far, higher if the 2018 budget, if the implementation had kicked in, early enough. Don't forget that GDP growth rate dropped in 2018 from 1.95 Q1 to 1.5 Q2, and that was the period that we had this budget delay. But as soon as the implementation started, we started seeing signs of positive growth trajectory again in 2018. So if we get out the 2019 budget in good time, okay, it's important the budget gets passed, even though the 2018 budget is still on in terms of implementation, particularly the capital component. Government has said any project that is not fully funded by 2018 will be carried over to 2019. But it's important that the 2019 budget, the appropriation bill, gets assented to in good time, so that implementation can start, because that again is what is likely going to affect growth rate of GDP in 2019. By the way, the World Bank has increased the GDP growth forecast for Nigeria from 2.1% to 2.2%. Okay, as at June 2018, the World Bank had said Nigeria GDP growth was going to grow by 2.1%, but they have seen reason now to increase it to 2.2%, in spite of the fact that global GDP growth rate has been dropped from about 3 to 2.9%. Again, that's on the back of, they also tied it to the likelihood that oil price will recover. Will recover. But again, there's a danger, and that's why some of us are also not too comfortable with the fact that for even the 2019 budget has used an oil benchmark that is more or less unrealistic at $60 per barrel. I think there's need for us to review that, so that we don't end up shooting ourselves, in the foot.
I just wonder, Professor Waleke, I'm sorry, let me jump in here while you're explaining. All of these numbers, let's try to humanize them. And I'm bringing you back to the point you made with regard to the job numbers. Okay, we created, let's say, 500,000 jobs. In the meantime, you're having 5 million persons who are out of work. The government cannot necessarily on its own create all the jobs. So what is wrong with that incentive chain for the private sector to accelerate its absorptive capacity for job seekers, not just at the federal level, but at the subnational levels? Yeah. What is it that we're not getting right, and what could happen in 2019?
Yes, the real challenge is actually making the growth rate inclusive. And when you talk about inclusive,ness, that speaks to the poverty level and employment level as one of the dimensions of poverty. You see GDP growing, and then you see, on the other hand, on the flip side, you see unemployment rate rising. And that's particularly because, well, the rate of growth is weak, in the sense that it is still being driven by a sector that is not employment elastic, the oil sector, so to speak, and again is below the population growth rate. So the focus should be on ensuring that that growth rate is driven by sectors that have this capacity to stimulate employment, rather than focusing on oil. No, that's one. So how do we now connect the two? If you look at the multidimensional poverty index, by the United Nations Development Program, the one that even the MBS did with them, okay, it's very clear. It talks about the 4 dimensions of the MDI index: education, health, living standards, and employment. So we don't have the current figure for 2018. The 2018 report, because the report comes with a lag. The 2018 report is with respect to the HDI index survey conducted in 2017. So we know GDP growth rate for 2018, but we don't know a corresponding the index. But we can extrapolate, if we look at the unemployment figure, to say that the growth is not inclusive. So the thing to do is to concern ourselves to use the report by the MBS and put policies in place that are measures in place that are evidence-based. Okay, the Empower program is good, for example, but I'm looking at the numbers involved. If you have 5 billion naira, for example, creating 200,000 jobs or 500,000 jobs, okay, the thing to do, even in theory, we say if you have public money to spend, publicly, you're asking yourself, how do you achieve the maximum benefit, from that expenditure? So you have to have alternatives. The 5 billion, what are the various alternatives, available? You assess the alternatives, but you now decide on what to do with it. So in my view, government shouldn't be creating, directly involved in job creation. That's the issue of social intervention. In my view, is they're okay because for now they are acting as a stopgap. But government should concern itself more with the creating enabling environment for businesses to strive, for the private sector to come in, and that is where our emphasis should be on infrastructure, infrastructure development.
All right, thank you. You're still watching Good Morning Nigeria, and I'm sure that the Minister of Finance is going to, of course, air her views on some of the issues raised by Professor Owaleke. But for now, let's take a break. When we return, we shall continue with the conversation.
It is that time of the year when we appreciate all those that mean so much to us. All sponsors, our clients, government at all levels, corporate bodies, advertisers, religious bodies, civil society groups, political parties, business, and above all, you, our esteemed viewers. Together we made 2018 great. Together we shall make 2019 even greater. And that is why we say thank you. Merry Christmas and a prosperous New Year.
Nigerians. Suicide bombers are not spirits. They are not ghosts. They are human beings like you and me. They live amongst us. They are your neighbors. They are your friends today, but terrorists tomorrow. So you must know your neighbor now. Security begins with you and me. Know your neighbor. Be vigilant. Be security conscious. Report suspicious persons, objects, and movements to the police and other security agencies. The security of our nation is a duty for you and me.
If you see something, say something. Nigeria unite against terrorism. This message is brought to you by the Federal Ministry of Information and Culture.
All right, welcome back, and it's Good Morning Nigeria, still live on the network service of the Nigerian Television Authority. Just before we went on that brief interval, Professor Owaleke was talking about how to make the economy grow much more inclusively and therefore deal with the unemployment numbers that are a consequence of some of the numbers that have also been elaborated upon. But the Minister of Finance was itching to respond to the issues that he raised.
Well, what I wanted to contribute is to say that the commitment that the President made is to make sure that the economy grows in a manner that is inclusive. And it's not a choice of do we create employment by government or do we just enable businesses to grow, to create employment. You have to do the two. We have some people, some part of our society, people that are very poor and extremely vulnerable that really need the support to grow. And this social investment program is not meant to be a permanent support for life for those people. All the programs are designed to give a boost, so you exit that particular person into a small business. The Empower program is designed to employ graduates for 2 years. And the first set that we employed, the first 200,000, their 2 years ended in October. But we gave a 6 months extension. Now they are going through special training to transit into businesses. So we will now be able to give them financing under the JEEP program that is managed by the Bank of Industry. The idea for us is that by the time they finished, when they were employed, they were given devices, like tools like this, And in each of those devices, we had special software according to what their areas of preferences are, so that they were able to learn and develop skills. So a lot of them, even as they are still employed as Empower graduates, are already doing some works on their own. So we'll exit them and support them with financing to start their businesses, and then we take on more. So it's supposed to be a revolving scheme. On the other hand, we have the JEEP program that is giving small loans, 10,000 naira to 100,000 naira, to very small businesses. And the person that is selling provisions ends up employing one person or two people. That is where the employment will come out. Or the market woman that is selling fabrics in the market will end up also employing one or two persons, just because you've been able to give her a small loan that has helped her to improve her inventory. So we have to do the two. For us, it's not either or. We have to do the two.
All right, madam. Nigerians are already in tune with the social intervention, mechanism which government, propounded and of course is implementing, and are looking into 2019. Is there any additional social intervention, or would you expand, the horizon of the one already in place for now?
We have 4 clusters. The homegrown school feeding program, which has done extremely well. We are not just feeding children in school, 9.5 million kids being fed in school, but we are also employing, through that scheme now, 90,000 cooks. Each of these cooks have other people that they have employed to help them with the feeding program. These cooks are buying foods from markets. So there's traders that are, whose trade is booming. These traders are buying produce produced by farmers in the local environment, because we insist that the food has to be locally acquired. So it has a huge improvement on quite a number of segments of the society, and it was designed to do so. And in also feeding children, we're also addressing the Human Development Index, because when you give proper nutrition, you get better educational outcomes, and also you have improved health outcomes. In addition to the feeding, we're also doing some deworming program for the children, and it's easy capture also to give them necessary immunizations.
All right, thank you very much. Nii, we still would like to weigh in here with regard to how to reduce significantly the unemployment numbers that we have at the moment.
I think what I want to do is to do a flip back, to the impact of the social investment program, for instance, because that's also in a way ameliorated the unemployment issues. In 2012, specifically, the World Bank announced that Nigeria is very poor, living under $1. When the international poverty rate was stated at $1, we had 112 million Nigerians living under $1. In 2015, that threshold was increased by the same World Bank from $1 to $1.90. It does mean that, of course, the population in that category of poor is expected to increase higher. But I am feeling that there's already the impact, the impact of the social intervention program is showing. If by 2017, 2018, we are talking of 87 million people, I think there's a need to also put this in perspective. The fact that Nigeria is now referred to or referenced as the poverty capital of the world is highly linked to the fact that when we had this crisis, Nigeria, like many other African countries, refused, to do anything about their poverty challenges. Meanwhile, India had 218 million people living under $1 in that same 2012. But because it's marshaled out policies and courses that addressed this issue, by same 2017, India had reduced from 218 million to 74 million. So it is not as if we grew past, India, but India reduced its own population of poor lesser than what we had, you know. But if we have been able to circle out, because that is what it translates to, if we have been able to circle out about 30 million plus people over the last 3-4 years, it does mean that our policies are working, and I want to congratulate the federal government for that. But going forward, I want to see a more intensified effort in the PPP arena. Here's our big tickets, capital spends are impressive. I want to imagine that in the next 4 or 5 years, Mambila will be giving us 6 billion. But I am already hopeful of the Kwaibo Power Project, for instance, a PPP, that is likely to bring in 1 billion in the next 3 years. And of course, we heard that the Kano State government had also shown an interest in that. I want to see an activation in real life of the Lekki Deep Sea port. I want to see an activation of the Ibom Deep Sea ports. These are big tickets, PPP, private-public partnership projects that would enhance not only inflow of foreign direct investment, but of course, increase capacity for employment, because it's in our big spends that we can actually enlarge and enhance our capacity to employ more of our population.
All right, thank you, Ni Akinsiji, there for that analysis. Nigerians are beginning to respond to conversations this morning by way of tweets, and let's just get a few of them read out. Abraham Chiejila says, "Good morning, Nigeria. If we have a free and fair, no violent election, the economy will be positively impacted."
Omakoji has this first tweet. "As usual, politicians have been saving huge money preparatory for vote buying as election in Nigeria has been monetized. So we expect free flow of money during the election period. Abnormal demand as people tastes would likely change. However, bankruptcy comes after the election."
All right, all things being equal, that's from Dele Majabi. I hope I got that correctly. All things being equal, the outcome of the 2019 general election should jumpstart the economy, sustain the agricultural development and the fight against corruption, increase infrastructural development, attract foreign investors by liberalizing the oil sector and cutting the federal budget deficit.
And he continues, "This is why we must handle this year's general elections very carefully. This is because there is a risk that election-related violence could disrupt production and probably also disrupt the implementation of the 2019 budget. So fiscal policy would then tighten. This should not be."
Now, from first, I can say 2019 will be a tough year, regardless of the outcome of the election. With falling oil price, imminent labor strike on minimum wage, and late passage of the budget, our economic growth will be weak and unemployment will increase. Government will remove oil subsidy and inflation will increase.
Oko claim policies and programs of any government can impact the economy. And our inputs into SMEs, the ability to attract foreign investors appropriately, will be part of what will shape the economy for Nigeria in 2019.
Daniel says our economy will only be positively impacted if we conduct credible, free, and no violent election. God bless Nigeria. But one wonders, Kinsley, why are people tying the nation's economy to election?
Well, that's a very important perspective. Professor Uche Waleke, let's return to you, and then, of course, to Ni as well. Now, the risk factors. Earlier, we said a year of great expectations, elections. We're having the elections kick off in 5 weeks' time. Yes. Actually, today is the 10th of January, and up to the end of the month, that's 21 days. Add 16 to that, that's 37 days, which gives you about 5 weeks and 2 days. There isn't a lot of tension or apprehension in the air, but what are the political risk factors with regard to the election itself that indeed all actors should be wary of?
Yes, as a matter of fact, if you look at the World Bank report, it identified 3 countries, Madagascar, South Africa, Nigeria, that will be holding elections in 2019 as places where it identified them as downside risks, to economic growth in those countries. So no doubt the general elections pose a lot of risk in the sense that it generates uncertainty. Investors, for example, are not sure of what the outcome would be, and that is why it's important that as much as possible we should continue to give them the assurances that elections will be free, fair and credible, and if it indeed it becomes free, fair and credible, you can imagine the kind of a positive outcomes we are going to get. Foreign investors will come back. The Central Bank of Nigeria, of course, if they come back, reserves likely to grow further. Exchange rate will further be stabilized, and the Central Bank of Nigeria will be in a stronger position to even relax monetary policy. So if they reduce the MPR, for example, from the current 14% and monetary policy is relaxed, there is a multiplier effect, a positive multiplier effect on the economy by way of ensuring that credit goes to the real sector. So I am optimistic that beyond May, the economy will pick up. Let me seize the opportunity to say this too, before time runs out. That it's important too that we begin to pay attention in this country, to the potentials of the capital market in job creation and even reducing unemployment. It's important we mainstream the capital market in our economic agenda. I just talked about what happened in 2018. The capital market, the stock market lost so much, not because our economy had problem. Usually it should be a barometer, okay? Not because the fundamentals are bad, but because of the exit of foreign investors and these political risks. So we need to have a robust balanced group of investors, so that even if foreign investors are leaving, we have enough domestic investors.
How do you get that balance of investors?
Yes, to grow the retail investor base, for example, and to also ensure that domestic investment, both by institutional investors and retail investors, okay, is also substantial to withstand whatever external shocks we get each time these people leave. And that is the more reason we need to mainstream the capital market issues in the overall economic agenda. I'm very pleased that the government now is beginning to also, bring in outsiders to help, in advising the government. The recent team the government is putting up, but that team shouldn't be just ad hoc. I want a situation where the government will expand the economic team to bring in outsiders to advise the government on how these things all right. Should
Thank you. Now let's bring in Nii here with respect to the election and of course the economy.
I think the president is showing leadership already, and I am impressed. May, July last year, most forecasts was that inflation rate will start increasing from November, December 2018 to a peak of up to 13–14% by May, 2019. And that had to do conclusively with election spend, spending going up to the election. I think, in a way, the president had created a new template for electionary campaign. Most politicians now grumble, confused, because it's not the way it used to be. Election spend are apparently very low. So much that some people are even saying, accusing the incumbent government, of not campaigning enough and all that. For those of us that are also interested in the financial process, I think that this is good, because it is not only creating a new philosophical outlook to our political environment, it's actually also telling us that money is not the most important item, in the electoral process. So I think to that extent, if we go at this pace, we are 37 days away to the general election, the first of the elections. If we go at this pace, I can't see any significant impact, on inflation deriving from general electoral election spend. And the president had at various platforms also assured of free, credible, fair election. That would be the greatest gift, to Nigerians. Because principally foreign investors and all that may be scared, but once we are able to do this, it will not only activate new economic processes, but it will increase the confidence, the international confidence in the Nigerian electoral process, so that in the next 4-year cycle, we won't be foreign investors will not be bothered about the texture or nature of the election we are going to. I will not see capital fleeing out of the space as we have experienced in this. So I think this is also building, for the future.
Thank you very much. Let's bring in again the Minister of Finance. Minister of Finance, one point that has been touched on somewhat peripherally has to do with the farmers' herders clashes. That, of course, can be framed around the social piece and how it impacts production, whether production on the farms, whether production in industry or otherwise. Plus, farmers' herders clashes, which has attenuated significantly. And now we are seeing new frontiers being opened up. Katsina, Zamfara, and of course Kaduna has always been there. We're not sure what might happen in the Niger Delta. What should be the outlook in terms of, again, appropriate security measures with regard to maintaining peace, keeping the peace, and guaranteeing the fact that people will have protection for their life and limb?
Well, thank you very much. Permit me to say a word on the elections. We see the elections in Nigeria now becoming a routine event. Our democracy has matured enough for even the investment community to just see this as an event. Everywhere in the world where you have election, there's always uncertainty. The president has directed the economics management team to stay focused on the economy so that we're not distracted by the noise around the election. So we're not working to May 2019. We're working for the next 4 years. And everything we do, there's nothing that is short term. Because whether I'm here today or tomorrow, it's a process that somebody else will carry through. We have seen improvements in the farmer-herder clashes. Very significant improvement. There is a program that has been approved, which is being rolled out to develop ranches for the herders, because that is what is causing the problem. The climate change has meant that in areas where there used to be fodder and water for cattle to feed, that when the season turns, there is no fodder, there is no grass or water. So they have to move to where they can find. And in the process of that, they end up destroying farms of farmers. So there are cattle ranches that have been approved. 20 states today have provided locations where those ranches will be built. We have just got approval for the first tranche of funding. And what we're doing is just securing an area, providing water, and enabling the herders to grow fast-growing grass to feed their cattle. So it contains them in one place. We believe this will significantly reduce the incidence of clashes from herders and farmers.
Now, still on you, Honorable Minister, it's important to note here that the success or failure of any economic policy rests on the quality of implementation. Some observers, did say that the government doesn't have a good economic team or expanded economic team. Now, moving to 2019, how do you intend to husband an implementation strategy to ensure that all the policies of government with respect to the economy will be adhered to?
We have a medium-term economic plan, the ERGP, and we have an implementation process. We have an ERGP implementation unit that has people that have been carefully selected, experts from the private sector that are on a daily basis, that is their work, tracking the performance of the ERGP execution priorities. So we have never had a time when implementation is so designed. Every key performance indicator has a clear target, is being monitored, and is being reported on. So we have our focus clearly defined for us, and we're not wavering. It doesn't matter what you do in any particular circumstance. There's always somebody who will say you're not doing it well enough. There has never been any administration that consults us, the Buhari administration. On a quarterly basis, we have a business meeting with the economics management team, with the private sector, and we listen to them, we take inputs from them. When we're doing anything major, whether it's a budget, whether it's a plan, or even you can see the minimum wage, we bring people like that. It's because this one is announced. That's why everybody is talking about. But we constantly are polling people from the private sector to come and give us advice on several topics before we take any decision. And this is going to continue.
All right. It's on that note we would like to thank our three guests who've been with us this morning discussing Nigeria's economic outlook for 2019. First, we'd like to thank Professor Uche Waleke, Professor of Capital Markets and Head of Department Banking and Finance at Nasarawa State University, Cafe. Professor Waleke, thanks for being around.
My pleasure, thank you.
We also would like to thank an investment and financial analyst, Niyi Akinsuji. Niyi, thanks a lot for being with us today.
Yeah, pleasure. Thanks so much.
And of course, last but not the least, the Honorable Minister of Finance, Hajia Zainab Ahmed. Thank you for being on Good Morning Nigeria.
Thank you very much for having me.
Okay.